Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody guys, let's take a look at the Bitcoin market as usual. This video on Monday. So in the beginning of the video I would like to say that actually to announce the new sentiment report that we have prepared on the Forex Peace Army. You could find it in my blog as usual on the forum, where we take a look at the sentiment that stands on the market in November. Well, it's a really hard time for cryptocurrencies, at least for Bitcoin, because currently market stands in some really dead way. And in October we already talked about the crash of hopes on the market, because it was a lot of hopes put on the coming backed product on the ICE exchange, on the options on the Bitcoin, because it should attract the institutional investors. But as you can see, investors still suggest that's not regulated enough. The market is not regulated enough, and we do not see really big inflow in the market, and that holds its development, holds its new application. And currently it's really it's important question what to do next. So market, it's already altcoins developing, token developing, ICOs developing, but all this already stand on the market. And in tightening regulation and the destruction of the Libra project, in fact, a lot of big banks, big companies deny on the cryptocurrencies, deny on involving them in the regular processing and regular trading. I mean the AliExpress, the PayPal, the MasterCard, the Visa, so they all denied the using of the cryptos in mutual projects. And currently it's really some stagnation on the market. That's really low understanding where to do next. That is the major conclusion that we're coming to. And from that standpoint, the bearish perspective on the market really increases its probability. And the price action that we see currently here is also mostly stands bearish and suggests that probably downward action could continue in the nearest future. Also, in our monthly report, technical part of the report, we are happy to offer you interesting technical tool that we have found on the market that calls as the miner's capitulation. This is a special indicator. As you can see, those of you who are using the trading view, it calls as the hash ribbons, and it's developed by Charlie Edwards. You could read their Twitter. We have the link to the Twitter of the Charles Edwards in our blog report. So you could read how to use this indicator. But in 2 words, just to save the time of the video, they are tracking the hash rate. And hash rate is a good indicator of the mining activity. When the hash rate starts dropping, it means that miners are ready and stands at the edge of the turning to the capitulation. Because when the hash rate is dropping, it happens when the price starts to drop and mining becomes not so attractive. That could lead to the chain reaction. When the price of the Bitcoin starts dropping, miners starts to sell off the coins that they already have mined, just to get at least something from the market. And this sell-off by the miners trigger another drop on the market. So this is some kind of the chain reaction exists when the miners turns to capitulation. And this indicator particularly tracking these moments on the market when the miners are really could capitulate. And a very important price for this is also this. You probably know that that's the break-even price for the mining. in general across the world. In different countries it could be different, but in general it stands around 7,000, 8,000 Bitcoin. This is a really important level for the Bitcoin market. And take a look, the last signal by this indicator, the capitulation has started from this dropping, lasts for some few months, and that where it comes to an end, that's the signal for taking the long position. So the Edwards idea is we need to buy not when the capitulation is starting, but when they're finishing. It tends to finish. This indicator is based on the hash rate. And you can see rally has started. Now we're coming to the next moment of the same process. You can see that another stage of the possible minor capitulation is happening right now. The market again drops to the 8,000, 7,000 area. Where it stands right now. Now we will be watching what will happen next. So if you would like to know more about this indicator, you could read our brief information on it that we put in our monthly report and technical part of this report. So this is really interesting. It's really interesting stuff. So on the daily chart, we use the same mining capitulation, as you can see, indicator with the hash rate. That's tracking by this indicator as well on the market, this daily chart, and you can see in more details that capitulation has started somewhere in this area. Starts dropping, now it's developing. So that's what about the new indicator that I would like to show you. It's interesting. You could experiment with this. Really interesting stuff. Now, what we have in the classical analysis. If you remember last update that we have prepared, we stopped on the upward action and we said, well, as first upward action is done, the first leg of the reaction of the support, we could get the bread body sell trade, because market has reached the 30% level, and that was potentially the level where market could turn down, because you did not know in advance where the bread body could start, either from this area or maybe from higher level. But that has happened, that the third close above the 3x3 has happened right at the 30% resistance. And now we suggest that market stands in a bread body trade, which suggests at least the 618 support reaching. So market should drop a bit more here. So if you plan to take the long position with a greater, maybe some kind of the ABCD reaction on the market, well, in this case, you could keep an eye on the 618 intraday support area, because that's the level that could provide you with the necessary protection if even your trade will be wrong and market will turn down later. Again, that will let you at least move up to the break-even. So as you know, we every time trying to take position in the strong levels. So on the 4-hour time frame chart, another moment that I do not like here is take a look dealing without the hand shoulders. Market has reached the AB equals CD target here. AB retracement that we discussed, ABCD retracement has happened, and market has tried to continue upward action. So here, as you can see, nice attempt has been done with the upward continuation, but market wasn't able to reach the XOP, the ultimate hand shoulders target, and turn down. This downward action, you can see, greater than this action up, and that is called as the bearish reversal swing, which probably should continue maybe after some retracement or something of that sort. The target of this drop, according to the bread body on daily chart, should be at least the 618 support of the whole upward action. So you could better see it on the hourly chart. That's our ABCD pattern, OP, our ABCD retracement, attempt to continue move higher, reversal swing down. Here, market has completed the 127 extension, stands at the 618 support, and it stands below the neckline, which means that probably we should not rely anymore on the head and shoulders, but take a look for a different pattern instead, how market could continue upward action, if it will be really possible. 1618 extension of the butterfly stands very close to the 618 support 70 even area, which is also the minimum target of the bread and butter. I think that we could focus on this area if you would like to take the long position. Potentially, if market really will decide to continue move higher, we probably could get the greater upside ABCD pattern that will be look like here, something of that sort. That we potentially could get if indeed upward action will continue. that's why this area will be important for bullish scenario. And I think that if you have the bullish view, you could keep an eye on for this level for taking the position. So if you would like to take the short position here, well, since we have the bearish reversal swing here, market could show some pullback, and you probably could use it for maybe taking the short position if you will get some clear downside continuation pattern. But to be honest, guys, difference between the current price action and potential target stance is too small. And if you haven't taken the position based on the brand body here, well, currently I think that's better to search for better chance for taking the position, because if even minor retracement here will happen, this will be minor levels, minor resistance levels. It will be not really good protection and too small target potential. So bearish scenario here is less attractive than potential bullish scenario, which could lead to the upward breakout. The only way where it will make sense to take the bearish position if market will break the 618 support and will not show any response on the support area, will start dropping lower back to the A point. Recall what was said about minor capitulation. This stage is just have started, and it could last for some time, and maybe market could drop more on a minor sell-off when miners will start to sell the coins. So maybe deeper retracement will start. That will be the important level to see, to watch. The same for bulls. If you will take the long position here, market will start upward bounce, move, start to break even. But if it will return right back down, break it lower, don't be long anymore. So it will mean that market is going lower. That's our view on Bitcoin market. So let's see how it will turn.